Hello guys, this is Wonderby Trading and we carry on with our weekly Bitcoin and Ethereum price analysis. The last week was just amazing in terms of the events which happened and occurred in the previous week and the result of this. Obviously the BTC and not only the crypto markets went down dramatically, and this video will try to understand what was the sequence of events which drag us to such a decrease in the cryptocurrency markets, and at the same time we'll try to predict what to expect in the nearest future based on the events which occurred. So let's start with crude oil today, because this was the main thing which triggered from our perspective the sequence of events together with others that made the markets dropped so hard. So on the top left you can see the Brent crude oil, the CFD for that, and let me just zoom in first, and on the daily graph you can see that from the December 2018 we were consolidating in this triangle, and on the 24th of January 2020 there was a breakout of this triangle to the downside, and then the retest of that area in on the 20th of February. And this would be the very crucial points based on the technical analysis. So you can see that we were consolidating for quite a long time. There was a breakdown below the triangle, the retest of the triangle, and we should expect a further move down, especially starting from breaking of this low in particular. So if we're breaking this low, we're going down, and this is just purely based on the technical analysis. We're not looking at the news at this particular moment. So what was actually happening during this time in the markets? So down here below we have the S&P 500 and the Dow Jones index. So basically, at the breakdown of this triangle, the S&P 500 was actually on a small increase, on a small rise, while we were going through this recheck phase. Yes, so let me just highlight this over here so you can clearly see it. So we're talking about this time frame, and on the S&P 500 this is this time frame. So you can see that there was an increase in the S&P 500 index, and actually a similar scenario was occurring on the Dow Jones index. So while the oil was rechecking its formation and preparing for the downward move, the S&P 500 was continuously growing, and the Dow Jones 500 was the Dow Jones Industrial Index was also continuously growing, not at the highest speed possible, but still it was going up. Then we broke below this lower point in the Brent oil price, and this happened in the beginning of March, and this is exactly where the market started to decrease dramatically. And obviously the coronavirus and everything to do in relation to it had its own effect, and quite a dramatic effect, and there is an interlink between the supply and demand for oil and the effect that coronavirus had on the macroeconomic environment of the countries. So taking into the account the news that the Saudi Arabia decided not to keep the supply of the oil on a steady output, and they decided to increase it, the price of oil went down dramatically. At the same time, the event which are linked to the coronavirus and the macro environment of the countries which are linked to that decreased the supply, because everyone went to a complete shutdown, especially in China in particular, who is consuming quite a lot of the oil as well. So taking this into the consideration, we see an increase in the supply and a decrease in the demand. Both of these factors are going in a similar direction in terms of the price of the oil, and it just dropped below the floor. So you can see that there was a huge decrease, an instant decrease, and that all happened during just a couple of days. At the same time, what we can also see is that up to the point of this breakdown, so up to this point over here, the gold, which is on the top right, was acting as, accordingly to the definition of a diversified asset. So the oil prices were the gold prices were actually increasing slightly up to the point of the 9th of March, because this is exactly the point when the Brent prices slammed, and this is the panic stage. So starting from that, the decrease in all of the assets, this is just panic on the one hand, that everything is going down, but on the other side, the gold as a the asset for diversification is quite crucial, because the institutional investors will store their some of the funds in gold, and if you see such a huge decrease in the markets, almost 25-30%, you will have to take the money from somewhere to overcome the difficulties which are occurring over here when you're trading with leverage, when you are losing your positions, and you have to cover your costs somehow. And this is exactly where you're going to be taking the money from your gold pot, let's put it this way. And this was the scenario which occurred through last week, and a very similar effect it had on the Bitcoin price. So let's switch to our typical Bitcoin charts, which are quite familiar to us. On the top left is the CME futures, on the top right is the market dominance of Bitcoin, and the two at the bottom are different prices from two different exchanges, Bitstamp and Binance. So let's start from the futures, and we'll start from the daily. Let's start from the weekly review. So over here you can definitely see that just based on purely technical analysis, we were bouncing around the 50 moving average, just slightly above it, and then the week started from the 9th of March. We saw a dramatic decrease of 30%, just one huge candlestick over there. The RSI broke below 50. And we are still down here at the bottom based on the BTC futures. On the daily chart, again, we can see this gap, and we were talking about this gap in the previous video, and we mentioned that this gap will not be filled, and we had this feeling that this gap will not be filled, and this is exactly what happened. So we stayed 3 days below this gap, and then a huge decrease of 23% in one single day. You can see obviously the volume was spiking. In relation to the cryptocurrency market, there was another issue which triggered such a huge decrease, and this is obviously the liquidation. The top figure in terms of the liquidation in 4 major exchanges, the BitMEX, Binance, FTX and Bittrex futures, they were over $1 billion. So that was a huge decrease, and this decrease, one of the parts, the major parts which were played during this decrease is actually liquidation position. So let's go to the dominance. Let's see what was happening here. There was a huge decrease all over the place in terms of not only the Bitcoin but also the altcoins. So that's why we can see that during the past week nothing was happening in terms of the dominance. Not much of the change was actually here. We can see the huge volatility. However, at the same time, this particular chart shows us that the markets are going in a similar direction. So if the Bitcoin was dropping, the altcoins were dropping as well. If the Bitcoin was rising to some extent, the altcoins was rising as well. It just depends on the speed of those drops and increases. But however, this flat chart is just representing the idea that none of the either BTC or the altcoins were dominating in the markets. Let's go to the Bitstamp exchange, and here we can see a very interesting scenario. I will switch back on our analysis from the previous week. So here, let me just remind you of what was actually going on. So we were expecting to go to the upper side of this downward trend. We didn't manage it, and the price started to decrease. We saw a small divergence right here on the top between the 9th and the 14th of February. So while the price was increasing, we saw the decrease in the RSI index. At the same time, on the 26th of February, we broke below the 50 MA on the daily, and this was one of the crucial points when we rechecked it and we carried on with a downward movement. And again, this was done when the gap on the futures market was formed. So this 9th of March over here, so we saw a huge decrease during the 8th of March on Sunday. We stood in this region for about 3 days, and then obviously a massive drop which was going below the floor. Again, this was primarily linked to the idea of liquidations, the massive drop of almost 40% in one single day. So that was a huge decrease. However, what was actually quite interesting is that when we were analyzing the price during the December time, we were thinking that there is a possibility that the price will go down straight and start consolidation in this triangle, because this is the bottom of the previous triangle in 2018. And to create the panic, you'll need to go below this level of support. And quite surprisingly, the price actually went below it straight away, and it can't go above it in the immediate return, which is also an important factor. It means that the market is trying to find the local bottom, at least trying to find the price which will be relevant for the market at this particular moment. And it seems like, going to the lower time frames, that at this particular moment we are trying to bounce between the 5,000 and 5,500. So in that region the volume is actually quite good. We can see when the price is going below the 5,000, we can see the immediate spike in volume. We see that the 50 MA is obviously coming towards this area of 6,000 to act as a resistance. And in the long-term run, it will be quite good to see the consolidation in this particular area, which will happen, can last maybe 2 or 3 months, and only afterwards starts to pick up and to increase in terms of the price. But again, the most important thing is that if we are accumulating, and we are assuming that we are starting the accumulation in this area, then the previous one, if we compare it to the 2019, the previous one took us around 130 days. So around this number, so we saw almost 4 months of consolidation. Here the speed can be higher. We may accumulate during the 2-month period, taking into account the high volatility and how the price action was developing. However, we need to see some good fundamentals for that. So at the current scenario, let's go to the Binance exchange to see where we're actually trading. We're expecting the following. So right now, you can see that we're trying to build up the volume in the area between the 5,000 and 5,500. That's one very important factor. Another one is that a very similar amount over here on the top was actually changing hands. So this price of 8,500 and 9,000, this was exactly the time when the long-term investors were trying to get out of their hands and probably went into the short positions over here. So now it seems like the certain proportion of the traders are buying back the BTC. But we need to see the longer consolidation in this area. We need to see that the moving averages are coming towards this price. We need to see the certain level. It looks like 5,500 at this particular moment, and we need to see several interceptions with this particular level. So we need to touch it several times before we can actually break it and go up. So it seems like the bulls are just starting to prepare for their long-term game, gaining the positions here, and it seems like a good point to start buying some of the BTC over here. We're not suggesting that this is the actual bottom. However, if you are a long-term investor, if you prefer to see the gains of that in 1 or 2 years, this is not a bad price to start building up the portfolio. Let's go to Ethereum, because over here we have a very, very clear picture of what's actually going on, and we use the volume to represent the clusters, which are quite important and quite vital for us. So once again, here is the line which represents the maximum volume traded in February. This one is the maximum volume in January. And what we can see here is that when the price was going down, there was a bit of a consolidation here, and the total volume was 5,994, and this is in thousands, so this is actually the million, 5 millions. Then we saw that the price went up to take some of the stops and went down dramatically. Yes, broken every single level of support. We are currently right at the bottom, and this line over here is representing the bottom of 2018. So this was the lowest price in the 2018. So what we expect here is a similar scenario to the Bitcoin, taking into account the dominance chart, taking into account the strong correlation, and taking into the account that now it's a good price to actually start building a portfolio. The price will bounce in that region, and then towards the end of the March, it would be nice to see the break below this area, maybe even a candle closing below 100, because this will be the idea that the price is carrying on going down. Here we can take all the stops and then start increasing towards the next big levels. By that time, the 200 MA will be coming slightly towards the $150, $130, and obviously we would probably see another cross, the downward cross, death cross on the daily graph. So that's the idea of building the portfolio while we're at the local bottoms, and then averaging out if we're going even further down. And then see the increase in April, or even maybe further in May. We might see the delay due to the overall economic situation worldwide. Okay guys, that was it for this week. Thank you very much for watching. Please subscribe to stay tuned with our weekly analysis, and best of luck with your trading.